Morning, guys. My name is Krishna, and I'm from Ipmi International Business School. And so today, I'm going to be telling you guys about the summary of my learning in corporate finance class. So I hope you enjoy my presentation. Okay. So before I start my presentation, I would like to thank my lecturer, Professor Roy Samuel, for teaching me a great lesson. Thank you, Prof. And to begin my presentation, I would like to show you guys the big picture of my mind map. So we learn so many things in the class, and I classify them into 10 topics. The first one is the financial management. Second, four cornerstones of the corporate finance, and then time value of money. We also learned about capital budgeting, active investing, capital structure, portfolio theory, fraud risk management, dividend policy, and the last is international finance. So, without further explanation, like without further introduction, we're gonna uh, we're gonna talk more about the first topic, financial management. So in financial management, we learn the definition of financial management, which is to uh, optimal orchestration of the internal and external financial resource, and the goal is the value creation of these resources. We also learn the good corporate governance principles in financial management. There are five principles: transparency, accountability, responsibility, the independency, and the last, fairness. And the goal of the financial management for the firm is to maximize profits and to maximize the shareholders' wealth. So the second topic is the four cornerstones of the corporate finance. The first is core of value principle, which means that the value is driven by return on capital, growth, and the cash flow. The second is the conservation of value principle, which means that we cannot create value by rearranging claims on cash flow. The third cornerstone is the expectation treadmill principle, which means that more investors expect high share price, which means that they have the belief that the company can perform better. And then the last one is best owner principle, which means that a business value depends on its owner's capabilities. So we're entering the third topic, which is the time value of money. It consists of two value, the present value and the future value. And the base of this time value of money is the compounding interest and also the period. Since we cannot assume that the money we have now is in the same value like in the next 3 years or 4 years because there is interest. And the fourth topic is the capital budgeting. So in capital budgeting, we decide whether to accept or to reject an investment. And how we decide to accept or to reject, we use these four methods: the payback period, the net present value, profitability index, and last is internal rate of return. So the last three, the net present value, the profitability index, and the internal rate of return, they all consider all cash flow. They also consider the time value of money, and they also consider the required rate of return. But the payback period did not consider the three of them. Did not consider the cash flow, did not consider the time value of money, and did not consider rate of return. So the payback period is not really a good method to decide whether to invest or not. And so, based on Professor Roy's teaching in the class, net present value is the best method to evaluate a project. And then the next topic, we learn about active investing. We divide into two analysis. The first one is the fundamental analysis, which we learn how to analyze the financial statement and also the financial ratio. And the second is the technical analysis. We learn about the momentum versus reversal, the uptrend, downtrend, the support level, resistance level, double top, double bottom, etc. The next topic is the capital structure. The capital structure, the components are the long-term debt and the shareholders' equity. And from the capital structure, I learned about the Modigliani and Miller theory, which is the capital structure of a company does not affect its overall value. So this theory is under assumption that first, there is no transaction cost. Second, there are no taxes. The third, everyone has the same information and also the same borrowing rates. And the last is that it's riskless and does not affect operations. And after that, I learned about portfolio theory. Like we learned about the return versus risk. Like we calculate how much return will we get versus the risk from investing in the portfolio. And the second is correlation and diversification. And the third is the CAPM or the capital asset pricing model, and the WACC or the weighted average cost of capital. And the next topic, we also learned about the fraud risk management. We learned about the fraud triangle, which consists of the pressure or the motivation. The second is the opportunity or the knowledge and the ability. And the third is the rationalization or the justification or the reason why someone is committing fraud. And second, we learned about whistleblowing, like a method or like a system that is designed for like witness of a fraud, so they can report like fraud or like some wrongdoings of employee to the corporate management. And from the fraud risk management, we also learn about the incentives, the physical incentives, monetary incentives, social incentives, and the moral incentives. After that, we learn about dividend policy, like why some companies distribute dividends and why some companies don't. So in this topic, I learned that the dividend policy is based on the fund's liquidity, the earnings stability, the expectations of the shareholders, the corporate taxation policy, the divisible profit, and many more. And we come to the last topic, which is international finance. We learned about the foreign exchange transaction, and then second is inflation rate, and the third is forward versus future market. So forward market is the over-the-counter marketplace, sets price of financial instruments for future delivery. And we also learn about future market, which is an option to call or to put commodity and future contracts, and also delivery is in the future. So that's all the 10 topics of the corporate finance. Hope you guys enjoy my presentation, and also I would like to apologize to Professor Roy if there is any topics or any explanation that I did wrong. And thank you all for listening to my presentation. Have a nice day.